Ever since the US Fed indicated that interest rates could start rising before the end of 2023, global markets have been on tenterhooks, guessing and second-guessing when the Fed's massive $120 billion a month bond purchases will come to an end. A big part of the reason for the Fed's change in policy has been the improvement in the US economy, with jobs numbers there also rising. A move towards the so-called tightening of monetary policy means a tendency for the US dollar to strengthen as it reduces the number of dollars in circulation. And so, relative to the dollar, other currencies, particularly emerging market currencies like the rand, will tend to weaken.
The dollar is very strong today, which explains most of the weakness in the rand. We've seen some risk-off sentiment coming through as a result of investors worrying about tapering sooner rather than later. That is tapering from some of the world's largest central banks, including the Federal Reserve. As the economic recovery is gaining traction, the need for excess liquidity is anticipated to decline, but that could have an adverse impact on markets. Usually, when there's risk-off sentiment, the rand tends to weaken outsized relative to other emerging market currencies, and we've seen that coming through today as well. This is because the rand is a very liquid currency, so it often serves as a proxy for emerging markets.
If the latest rand weakness is sustained, South Africa runs the risk of importing inflation. The Reserve Bank may have more worries on its hands as it weighs the inflation picture going forward and may decide to raise interest rates later this year. Much will hinge on US Fed policy and when the quantitative easing will end. The annual Jackson Hole meeting that tends to elaborate further on US monetary policy may give the market further clues next week, which will in turn influence the course of the local currency. Nompumelelo Siziba, SABC News, Johannesburg.